Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. I want to give you some comments on today's grain trade for Tuesday, April the 28th. Let's start out with corn. A pretty quiet trade as usual. Last time I did a video, talked about one too many times down here to the bottom side of the range. We did break down, but as is normal with corn, it was only another 5, 6, 7 cents. Nothing really dramatic. Obviously wheat's been falling in the meantime. Corn today, there's really nothing to be said, quite honestly. We were able to get to the highs briefly and trade 2 cents higher on the day with the wheat market. Sold off into the close. No real news, and we continue to just kind of wait. You saw 19% for the planting number yesterday versus 25% on the average, but it's just not a market mover right now, and I don't really expect a whole lot out of corn in the near term. Moving on to the wheat market, 5-year lows today in Chicago wheat. What was interesting about the price action, if you could say anything, once we went down and made those lows, we bounced up rather quickly to a degree, trying to reject it, at least when you're looking at the price action. Not getting bullish wheat, not trying to create a story that's not there, but if you could hang your hat on anything, the market was able to come back. Closed pretty firm. You had Kansas City up 7 cents. Chicago was up almost 5 at one point. So just finally, they're letting it breathe a little bit. I think more than anything, it's just a correction from that oversold that we saw here today. But the fact that the dollar was down as heavy as it was, you got to think is helpful as well. We'll see if we can string a couple of days together. The last time, probably 25 or 30 cents ago, I said everyone talking about the fund short is just not really the best strategy. Since then, the market's broke another 25 cents at least. So for now, we just have to see if we can get competitive, pick up the exports, and if, hypothetically, the dollar is trying to top out, that'll be impactful in wheat moving forward. On to the soybeans. Meal did some leadership today. That was good to see. You saw the July-November bean spread did trade out to 26. Obviously, that's the highest we've seen in some time. Fundamentalists believe that spread should be, trading even money or a carry. What was interesting about the beans, and we've done this multiple times now, if you remember when we went to 80, we sold off, and then the next time we went up there, we went to 83 and we sold off. We did the same thing when we went to 85, and then today we went to 88 on basis of the July contract for soybeans. It was strange because the market just sat there, and it was, to an extent, when you're looking at the price action, a little concerning if you're trying to be a seller, because the market refused to roll over, and then just as right immediately after thinking that, they came in to sell the market. So we finished the day. I did see a 75.25 trade in that July contract, good 13 off the high. For price action, seem to be rejecting the level, and to be garnering any further upside, I think you're going to need more news out of South America regarding that strike, and second to that, you're going to need the meal market to really take off. Until something changes, you got to just keep on trading them. It's interesting though, when you look at the pattern, we make new highs by 3 cents. Here come the sellers. That's probably the 3rd or 4th time now, and I didn't think it was a particularly good close. So if we start to get back up near today's highs and or start closing over that level technically, maybe we'll have something more to talk about. In the meantime, I'm selling rallies in the beans until something changes fundamentally. So thanks for listening. Again, this is Kyle with International Futures Group in Chicago, a division of EFG Group. Don't hesitate to give us a call if you have any questions. Thank you.